Hi, I will talk to you about the company Procter & Gamble and the analysis of their financial statement. Here is the agenda of the presentation. First, I will talk to you about the preliminary research and moving to a brief introduction about the history of the company. And then I will talk about key ratio analysis and horizontal and vertical analysis. And finally, I will conclude the presentation about whether you should or should not invest in Procter & Gamble. So, Procter & Gamble is an American consumer goods company which specializes in healthcare, personal care, and hygiene products. They operate worldwide in 180 countries and they have 95,000 employees all around the world. They operate mostly in America, Asia, Africa, and most of the Europe. So here you can see the 5 main segments that the company operates in. So healthcare, fabric care and home care, baby care and family care, beauty, and grooming. As we can see, the fabric care and home care is the leading segment. In 2018, Procter & Gamble had sales revenues of $66.912 billion. As I mentioned before, their industry is consumer goods, and in that industry, their main competitors are Unilever and some local small brands. And here you can see also some of the brands of P&G. Main brands that most of the people know are Pampers, Oral-B, Head & Shoulders, Gillette, and many others. So, here is briefly about the history of the company. So, P&G was founded in 1837 when William Procter, an English candle maker, and James Campbell, an Irish soap maker, met by chance. So they were basically both married to 2 sisters whose father convinced them to become business partners. And 22 years after the partnership was formed, P&G sales reached $1 million. In 1879, James Campbell's son, he developed new product, a white soap called Ivory, and because of that they moved to other states to sell their products, and they started to advertise their products for the first time. And in 1986 they introduced Tide Pods to the market, which led to them entering the global markets. In 2000, they had a loss of nearly $50 billion in their markets, but they fixed that by increasing their brands and categories. And by doing that, their sales increased by 40% and they doubled their profits. Here we can see the horizontal and vertical analysis of 2017 and 2018. So as we can see, the change in euros has not been that much. And in 2018, the profit was 244 euros and 1.7% less than in 2017. About their profitability, their operating profit is 24.44, which is not that much more than their ideal margin of 10 to 20%. The trading profit is really good because the good margin is considered to be more than 10%. The return on investments is also pretty good because it's above 10%, which is the good margin. Efficiency, their stock days are a bit less than the target value, but not necessarily that much. And the debtors days is really high compared to the target value, which is 20 to 25 days. And creditors days is 28, which is also not that much less than their target value. About liquidity, their current ratio is 0.78, which is considered to be poor. And about current ratio, it has decreased from 2016 when it used to be 1.10, which would have still been fair amount. Quick ratio is currently 0.61, which is considered to be fair, and as well as current ratio, quick ratio has decreased from 2016 by when it was 0.93. And here is some numbers about their capital structure. Equity ratio is 45%, which is considered good. Their debt equity ratio, which has remained almost the same since the year 2006, is 0.4, which is also really good. And their relative indebtedness is 26%, which is also good. And here are some conclusions. You can see the numbers of P&G compared to the main competitor, Unilever. So the numbers are pretty similar, but a bit higher than Unilever's numbers. And whether you should or should not invest in Procter & Gamble's, I could say that the revenues have gone down pretty much from 2012, but it's predicted to start increasing in 2020. And the reason for the revenues going down since 2012 is because in 2014 they started to sell a lot of their good brands. They sold around 100 brands to other companies because they wanted to make their business more about the core products, like these segments that I mentioned in the beginning. So they have sold a lot of good brands such as Pringles and CoverGirl, a cosmetic company, Max Factor, Duracell, like a lot of good companies that actually make a lot of profit these days. But they have been trying to fix the situation by trying to focus more on developing markets such as Asia, and they have tried to have a bigger online presence by, for example, partnering up with Amazon, which should lead to their products being more sold online, which should be a good thing for their capital stock. And basically it should lead, like the fact that they're selling their good businesses and products should lead to a faster growth and improved margins. But they are struggling currently because Unilever is inventing a lot of new products which are appealing to millennials, but P&G is not doing that, so that's a big problem. So in conclusion, I would say that it's a bit of a risk to invest right now, but if they success in selling the products that are not good for their company and manage to keep their revenues steady or grow them, and if the stock value goes a bit lower, then I would say that it's a good idea to invest. So, thank you for listening.